Welcome back, traders. Happy to have you here today. In this short video, I will show you how to build a powerful and effective trading strategy with the QQE Weighted Oscillator to detect trade opportunities in the market. The QQE Weighted Oscillator improves on its original version by weighting the RSI based on the indications given by the trailing stop, requiring more effort in order for a cross with the trailing stop to occur. The QQE Weighted Oscillator comprises a smoothed RSI oscillator and a trailing stop derived from this same RSI. The oscillator can be used to indicate whether the market is overbought or oversold, as well as an early indication of trend reversals thanks to the leading nature of the RSI. Using higher factor values will return a longer-term trailing stop, like with a regular RSI divergence, can be indicative of a reversal. Further weighting will control how much effort is required for the trailing stop to cross the RSI. For example, an RSI above the trailing stop will require a higher degree of negative price variations in order for a potential cross to occur when using higher weights. This can cause higher weightings to return more cyclical and smoother results. To apply this indicator on the trading chart, search the keyword QQE Weighted Oscillator and select the QQE Weighted Oscillator by LuxAlgo on the TradingView Indicator Community Scripts folder. Here is the trading indicator. Before I proceed to educate you about how this trading indicator works, I need to highlight this indicator and its purpose so you can quickly understand how it works. To do this, we need to right-click on the indicator and navigate to the Settings option. Here are the parameter settings of this indicator. Under the input, there is the length. The length of the RSI oscillator is 14 by default. Factor, multiplicative factor used for the trailing stop calculation is 4.236 by default. Smooth, the degree of smoothness of the RSI oscillator is 5 by default. Weight, the degree of weighting used for the RSI calculation is 2 by default. SRC is set to close. There is RSI set to blue color by default and trailing stop colors red and teal by default. Under the Style section, there is the RSI, trailing stop, and level of 70 and 30 scales. The output precision is the default. There is an option to check or uncheck the labels on price and values in the status line. How does the QQE Weighted Oscillator work in the market? The primary purpose of the QQE Weighted Oscillator is to provide a potential overbought and oversold region in the market price of a financial asset. Whenever the QQE Weighted Oscillator plunges to the 30 scale or below, it usually signals that the price of such financial instrument is oversold and traders should be watching for possible reversal points to the bullish side in the price of the asset. Likewise, whenever the QQE Weighted Oscillator rises to the 70 scale or above, it usually signals that the price of such a financial instrument is overbought and traders should be watching for possible reversal points to the bearish side in the price of the asset. Also, the indicator can also be used to figure out divergence systems on the price chart. Divergence is the opposite swing of direction on the price chart and oscillators. This is a very powerful tool for all technical analysis traders trading the demand and supply strategy in the market. It's also a great indicator to help traders detect potential early points of a trend reversal in the market through its divergence system. How can traders use the weighted oscillator for the continuation of a bullish market? To use the QQE Weighted Oscillator in a bullish market, traders need to watch out for a trending bullish market. In a bullish market, the price needs to carve higher highs and higher low priced swings as the examples on this price chart. Next, traders need to watch out for the price to make a counter-trend price move against the bullish trend, just as the example on this price chart. The next step is to watch out to see the oscillator trades at the oversold region at the 30 scale or below the 30 scale level. Next, traders need to monitor the RSI blue line crossing above the trailing stop red line. Next, traders should ensure that that crossover of the RSI is trading above the 30 scale value point. The final step is to ensure that the price charts respond with a strong bullish candlestick before proceeding to buy the bullish setup. For the divergence system on a bullish trend, traders need to watch out for the opposite swing direction between the price chart and the QQE Weighted Oscillator. Remember that in a bullish trend, the price should be repeating a swing higher high and higher low on the price chart. Next, traders need to watch out for the point of intersection between the plunge of the QQE Weighted Oscillator and the higher low swing on the price chart. The QQE Weighted Oscillator should slope downward while the price chart should slope upward. If the QQE Weighted Oscillator later close above the 30 scale value line, then traders should monitor the price chart to transform into a strong bullish candlestick. The formation of the strong bullish candlestick above a minor level on the price chart would signal the bullish entry for the bullish hidden divergence setup on the QQE Weighted Oscillator. Stop loss should be placed below the higher low price swing that intersects the upward crossover of the QQE Weighted Oscillator above the 30 scale value line. Traders should close the buying position whenever the QQE Weighted Oscillator trades into the overbought zone at the 70 scale line. How can traders use the Weighted Oscillator for the continuation of a bearish market? To use the QQE Weighted Oscillator in a bearish market, traders need to watch out for a trending bearish market that carves lower low and lower high. Next, traders need to watch out for the price to make a bullish counter-trend price move against the bearish trend. The next step is to watch out to see the oscillator trades at the overbought region at the 70 scale or above the 70 scale level. Next, traders need to monitor the RSI blue line crossing below the trailing stop red line. Next, traders should ensure that crossover of the RSI is trading below the 70 scale value point. The final step is to ensure that the price charts respond with a strong bearish candlestick before proceeding to sell the bearish setup. For the divergence system on a bearish trend, traders need to watch out for the opposite swing direction between the price chart and the QQE Weighted Oscillator. Next, traders need to watch out for the point of intersection between the rising of the QQE Weighted Oscillator and the lower high swing on the price chart. The QQE Weighted Oscillator should slope upward while the price chart should slope downward. If the QQE Weighted Oscillator later close below the 70 scale value line, then traders should monitor the price chart to transform into a strong bearish candlestick. The formation of the strong bearish candlestick below a minor level on the price chart would signal the bearish entry for the bearish hidden divergence setup on the QQE Weighted Oscillator. Stop loss should be placed above the lower high price swing that intersects the downward crossover of the QQE Weighted Oscillator below the 70 scale value line. Traders should close the selling position whenever the QQE Weighted Oscillator trades into the oversold zone at the 30 scale line.